retailers feeling Christmas cheer. Numbers from MasterCard Spending Pulse are showing retail growth of 3.6% this holiday season. That's so far compared to last year's numbers. The report credits rising sales to a robust job market and high consumer confidence. And we're going to get an updated look at how consumers are feeling with the December reading of consumer confidence this week. But let's bring in for more on this Wells Fargo Investment Institute Senior Global Equity Strategist Scott Wren. Scott, good morning.
Hey, Cheryl. Merry Christmas.
Merry Christmas. All right, so looks like Santa Claus came early for the retailers, huh?
Santa Claus did come early. You know, this has been a good season, but, you know, you pointed out the main factors on your intro there, which is, you know, consumers' confidence is high, the labor market's improving. So, you know, that's the kind of things that drive holiday sales, and it certainly, I think, is going to prove to be the main factors this time around. So talk about some of the names. I mean, because, you know, we all talk about the Amazon effect, right, Scott? So you've got the online side of it, online. But the bricks and mortars, maybe your Macy's, maybe some of these guys actually kind of had a better year than we thought they would. Yeah, you know, I think so. And really, when you look at those, if you look at department stores and those kinds of things, you know, that's a very small percentage of the consumer discretionary sector market cap. But I think that will be a big surprise in this holiday season, is that the brick and mortar guys, you know, internet retail obviously has been killing it, but the brick and mortar guys this time around, it looks like all their numbers are pretty good. You know, we won't know for sure for a little bit of time here, but certainly the preliminary data looks really good.
They weren't, Scott, this is Dom Tavel. They weren't all winners, though. We heard earlier about Under Armour and their problems and Foot Locker. What were some of the other firms that kind of just missed on this one?
Yeah, I think that you know, some of the names that have struggled, I think the big surprises are going to be some of the more larger department stores. You know, you mentioned Macy's, things like that. I think those guys are going to show some decent numbers here. And, you know, somebody like Under Armour who has struggled, you know, I think those things aren't generally changed in a holiday season. There's other issues going on with a lot of these companies that have struggled.
Right. Macy's stock up 24% in the last month, Gap up 18%. And isn't this coming week also, this week right now after Christmas and before New Year's, is also very important for retailers. And we expect to see sizable sales this week.
I think so. You know, just, you know, you're going to see, of course, a lot of returns starting today. And those returns, a lot of times, they're exchanged and then people spend some more money. And I think given the mood out there, that's likely to happen this time around, too. But for us, and you mentioned the piece that I wrote this last week, Cheryl, is that, you know, I mean, Santa Claus came early this year. Let's face it. I mean, this has been a great rally in the stock market. It's been good the entire year. And, you know, if the market stalls out here, trades a little bit lower here in these last few trading days, yeah, that's nothing to be concerned about at all, I think.
I liked your Santa Claus coming early this year. I obviously stole your line from your report, but it's been like Christmas morning for the markets. I mean, that's one of the best stories, I think, of 2017. The Dow up 25%, the S&P 500 up 20% for the year, both on track. Best performances in years, Scott. You know, as we approach the end of the year, what are you watching? And more importantly, do you think that the party continues next year?
Well, I think, you know, for us, you know, is 2018 going to be like 2017? I don't think it is. You know, we want to make sure we're fully invested here. We want to lean toward stocks. We want to lean toward those sectors that are sensitive to a continuation of the recovery. I think the tax legislation that was just signed by the president is likely to extend this expansion for a couple of more years. So, you know, consumer discretionary, industrials, financials. We also like healthcare. You know, we want our clients to be assertive. We don't want them to hide in staples and utilities and things like that. So I think we're going to have a decent year this year. You know, we're late in the cycle. Some of the growth rates out there that people are talking about, GDP-wise, I don't think we're going to see that. But, you know, we might be up towards 2.6, 2.8, maybe something like that, which, hey, you know, that's you know, that's a good number. And so I think inflation stays low, GDP picks up a little bit. And those sectors really that should do well in a continuation of the recovery are the ones that are going to lead the charge.
Scott, Steve Rogers here. I'm one of those fellows that missed the Mayberry days of the local hardware store, the local small businessman.
I miss that too.
Yeah. Do you see any hope for some growth there in the future?
I'm not so sure. I think things have moved along to these big boxes. Home improvement retail. It's tough to compete with these guys, and I think that these smaller specialty stores, some of these are going to be okay. But when you really, if you're really going in there to do some home improvements, some remodeling. And just a lot of smaller stuff in general. You just don't have the selection. Prices tend to be a little bit higher than you can pick them up somewhere else. So I like to frequent those kinds of stores, and I do, but I'm not sure that most people, the general population, would agree with that.
Small town America. Well, really quick, I can't let you go without asking about Bitcoin. Obviously, Bitcoin declined as much as 30% on Friday. Fact or fiction? Let's just go with that, Scott.
Well, Cheryl, I tell you, I was in the currency market from the mid '80s to the late '90s, and the currency market was really pretty wild a lot of that period of time, but it wasn't this wild. And so I think this is the wild, wild west. The CME, they'll trade anything. We're not really encouraging our investors to get into this thing.
Are they asking you about it though, Scott?
Well,
are people calling up Wells Fargo and saying, "Hey, I want some Bitcoin"?
Yes.
They are?
The phone is ringing off the hook, and it's hard to address. Our retail investors. In this kind of a market, they're loving it. If they would be in Bitcoin, it was going up. But when you have a $7,000 or $8,000 pullback in a couple of weeks, I don't think they'd be too happy. So I think right now. For me, I'm never on the cutting edge of this kind of technology. And so for me, I would be very, very cautious if I was a retail investor. This is I just don't think this is the kind of deep enough market that most people want to get involved with right now.
We had a guest earlier say this is just gambling, but we'll see.
It is. It's like, let's face it, you've heard it before. It's like the modern day tulip bulb craze, in my opinion,
that's right.
which could be totally wrong. 5 years from now, I could be kicking myself, but I'm not sure. I just don't know.
Pets.com, Scott.
That's right.
Where are they? Scott Wren, thanks for being here.
Okay, guys.
All right, happy holidays.